Hi friends, Simit here from InformedTrades.com. In this video, we'll take a look at the trading statement of Jared Martinez, the founder and CEO of Market Traders Institute, a Forex education firm. We'll take a look at the statement, dissect his trades, I'll share my thoughts on it, and see if we can learn something. So let's get started.
Okay, looking at the statement now of FX Chief, Jared Martinez from Market Traders Institute. First thing we can see is that the trading started in June of this year, June 2013, and so now we're in early November. So we're just about slightly over 5 months, basically 5 months, and in that time the account has increased in value by 95%, almost 95%, 94.99. So that's very impressive. That's the first positive thing we can start at. That's impressive. Now, there is a significant drawdown, and as we'll get into this trading approach, or as we study the statement a little more, we'll see that there are quite a bit of risk being taken. So that's also something to consider, and we'll look at ways to measure the gain versus the risk and see how proportionate it is. Here we see in early June the account experienced a drawdown of 25.36%. So that's the most it's ever gone negative. So we're up almost 95. The most that was ever negative was 25.36. However, that's measuring from the starting point of June 4, 2013. Now, if someone, let's imagine this were a fund, and if someone were to invest here, September 20th, 2013, all the way down here, now we're dealing with a drawdown. This is a change of about 27.9%, so a little bit more than this drawdown we saw here. Basically a 28% drawdown is the most we've ever seen in this statement over the past 6 months, or excuse me, a little over 5 months. From the peak to the lowest has been the biggest shift. So if someone were to if this were fun and someone were to have bad luck and they invested here, and then they would have experienced at some point a drawdown of nearly 28%. So that's something to consider. Scroll down, get a little more into the metrics of the trading. So first we see 52% of the longs have been won, 57% of the shorts have been won. If you do the math on this, you add up the longs that have been won, the shorts that have been won, divided by the total number of trades, and we get a win rate of about 53%, a little over 53%. So that's above 50%. That's decent. That's I guess average, you could say. If we look at the win-loss, we see that the wins are about 1.38 times the size of the losses. So 1048 divided by 754 here, we get a win-to-loss size measure of 1.38. So basically, putting this data together, this Martinez is winning 53% of the time. The win-loss size is 1.38. Those are decent numbers. You want to be winning, or with many systems, with a system like this, it's good to be winning more than half the time, and it's good to have your wins bigger than your losses. So that's definitely positive, and that's at the heart, in my opinion, of being able to get positive gains and sustain them, and being able to have gains that are larger than the drawdowns. Now, going on a little bit more here, and this is something that I personally found a little concerning. So far, 95% return in 5 months is outstanding by any measure. That's fantastic. And the numbers we've seen so far with the win-loss ratio and the win-loss size, those I think are decent, are sufficient. The wins are bigger than losses, winning more than losing. There's a method here that clearly has some merits in terms of its trading. One thing, though, that I found, or what scares me the most personally, aside from the 28% drawdown, to me that's a little high. But I'm more conservative. I'm also not putting up 95% returns in 5 months. So a lot of it depends on what's your risk appetite for risk is like, your risk tolerance. Personally, I prefer to have much less than a 28% drawdown. I get concerned if it's going to be 10%. I like to be risk averse, but a lot of it depends, like I said, on your approach, how you are with capital, and how much of it is you're risk free and you're looking for the upside versus how cautious you really are and you don't want to lose it. But here is so right now this also gives further insight into the risk that's being taken here. right now, or if we scroll back up, we see the balance on the account is 96,000, a little more than 96,000. So let's just, for the convenience of math, let's say it's let's call it 100,000. Now these are standard lot size, which means there's 100,000 units of currency. So if you're putting on, for instance, a euro-dollar contract, and you've got two of them here, this is 200,000 euros you're trading. This is a 200,000, another 200,000 euros you're trading. So if you add this all up, you've got 25 lots, which is, that comes out to 250,000 units of currency. So basically 250,000 units of currency relative to a balance of $100,000, or about 100,000, and we're seeing 25-to-1 leverage. To me, that's very high. And at the same time, we're also seeing no stops, or here, at least on the current trades that are currently being placed, there are no stops and limits. So this, I think, is also, I personally always like to put a stop in. I don't really see why not. In this type of scenario, where if the market really moves against you for whatever reason, some type of dramatic event, the account can be in quite a bit of pain. Now, there is always a chance that even if you put in a stop, that the order won't get filled, the market will gap through it. A lot of it depends on your broker. A lot of it depends on what's going on in the market. So a stop loss is not a 100% guarantee, but I think it's something that is worth putting in. And it can be effective in terms of limiting, your downside. So to me, when you've got 25-to-1 leverage and no stop target profit, that also is above my risk tolerance. I personally get a little concerned about that, but a lot of it, like I said, depends on the approach of the trader. Personally, I don't really use, very, very rare. I think there's been a couple times where I've gone up to 10-to-1, and that's just been in very unique market conditions where the positions are really going in my favor. It's a trend, I'm riding it. Usually it's, 2-to-1, 3-to-1, 4-to-1, if that. 25-to-1 is pretty significant. We also have a number of losing positions we can see here. So that shows that this is not really a pyramiding strategy. If it was pyramiding, there'd be a lot more winners, and that's when you get up to, with pyramiding, a lot of it is, the more you're winning, the more you add to it. So that's not the kind of approach that's being taken here. This is just sort of a pretty aggressive trading strategy. We can also do a little more filtering here. We can see actually, let's take a look at the history. So we see there's also been, actually, let me filter this. We'll filter out the deposit, withdrawal, and the interest. Okay. MyFXBooks, by the way, I think is a really great tool. If you have a trading account, you can use it. FXCM, Forex, a bunch of brokers offer integration with MyFXBooks. It's very easy to set up. If you have any questions on it, ask on Informed Trades, and we'll be able to help you out with that. Okay, so here we see there's been 217 trades placed over the past 5 months. So this is a fund that's definitely being traded pretty regularly. A fair amount of trades being placed. And we see in terms of, the drawdown or the worst trades that have occurred, here's a trade that resulted in a loss of negative 6.5%. So that was the biggest loss. The biggest gain was 11.62%. And that's a little consistent. I'm not that surprised by these numbers based on what we looked at earlier. We saw that there was an appetite for risk, so a 6%, 6.5% loss is something that you might expect with this type of a trading strategy. Personally, I'm on the opposite end. I haven't. My trades usually are like a 0.25% risk, and I'm looking for a gain of like 1%. If I risk 0.25% and I gain 1% or 1.5%, to me that's like I'm thrilled. I think that's a fantastic trade. Here, we're dealing with bigger numbers. So like as you can see here, biggest loss negative 6.5%, biggest gain 11.62%. It still is, though, the gains are bigger than the losses, and that's something that's important, and we saw that earlier when we looked at the average win size versus the average loss size. Came out that the wins were 1.38 times the size of the losses. So that I think fits into textbook good trading. Let's see, there are some other numbers that I wanted to show here. Oh, there's also a lot of yen trading here. That was something I wanted to highlight. There's quite a bit of yen trading going on. That definitely is what Martinez focuses on, and they have a Market Traders Institute has a course on trading yen. So if you're interested in this approach, that yen course may be interesting to you. We have a review of their course. There's links to a webinar if you want to try, sample that. That's something to consider. But you'll see here a lot of yen trades. So 20 trades on pound yen, 18 on dollar yen, CAD yen, Swiss franc, Aussie yen, all the double-digit trades here. Basically, one could view this as largely a yen fund. And I actually ran the math separately. The yen trades are very reflective of the math we looked at earlier, where it's the win rate's still a little over 50%. The win-loss size is still around 1.4, 1.38. So those numbers that we talked about earlier are reflective of the yen strategy. So this fund is very basically a yen fund in a lot of ways. Oh yeah, the one part I wanted to highlight. Daily, okay, so we see the trades are fairly distributed throughout the week, a little less on Monday. Hourly, I think, is always worth looking at. Now, I believe that this broker is ILQ, which is on GMT +3. So I'm not 100% sure, but I think that's the time we're looking at here. If somebody knows, definitely please clarify in the comments. But I'm assuming that this is GMT +3. So then if we want to look at from a New York perspective, we would want to subtract about 8 hours. So 16 is 4 p.m. We subtract 8 hours from that, we're at 8 a.m. So the majority of the trades, if I've calculated this correctly, are occurring 8 a.m. New York time, so the beginning of the New York session. We see a lot of activity there. We also see some at 19, which is 11 a.m. New York time. So basically New York morning is where we're getting a lot of the trades. And Market Traders is located or operates out of Florida, which is on the same time zone as New York. So that would make sense. This is on their schedule, New York mornings or East Coast of the United States mornings. So that's sort of where they're finding their opportunities. In terms of the duration, these trades are not they're not intraday trades for the most part. You see some trades are being held a reasonable amount of time, a day, a couple days. We see a lot of those trades here. Actually, we can even look at this here. You can see that, So there's some trades that are closed out for, 21 minutes here. That was pretty short. But we have on the other end 17 days, 24 days. So we have a lot of trades that are held overnight. That's also something that I found a little concerning. It's one thing to have no stop and no stop when you're trading intraday and you're watching the market. If you're going to be in and out within 5 minutes, then you don't need to put a stop and you're just watching it. Your eyes are on the trade the entire time. That's one thing. To go to bed and have it, no stop overnight, and to do that multiple times, nights, weeks on end, that introduces another level of risk, in my opinion. That's about it. Just wanted to review this. I think it's insightful to look at other traders and their approaches. If this is something you're interested in, ideas you can get, see how this type of a trading strategy can work. It's clearly 95% in 5 months. There's a lot of risk being taken here, as we discussed. So that always is. I like to mention that because there's a chance where, we saw here 28% drawdown. So while it is up 95% over the past 5 months, it also is down 28%. If this strategy continues to work, chances are you need to be comfortable with that if this is something that you're interested in. You need to be comfortable with pretty significant swings. We have links to a webinar from Market Traders Institute below this video if you're interested in learning more about them, as well as links to my previous reviews of some of the things that they offer in the webinar that I tried. Any questions, anything you want to add, join us at informedtrades.com. Thanks and best of luck in your trading.